Those buffers, you might argue, are there to protect the customer, but they're also there to protect the bank itself. This is about having unquestionably strong banks and therefore not having people going broke and landing bad and doubtful debts back on the banks, creating question marks about the strength of those banks.
Yeah, that is definitely true. And I mean, that 1% buffer, like it might sound like enough for now, but if you rewind 12 months ago, I don't think anyone foresaw where rates would end up. So it is a risk that you're saying, okay, as long as you can cope with 1% higher, then we think you'll be fine. But I think it also says one other thing, that the banks are comfortable that they have their assumed living expenses, but they think that households, push comes to shove, will cut by more than that. And I think that will be the real test. If need be, it might mean lower living standards and it might not be nice, but people can cut below that assumed living expense metric anyway.
It also says to me that maybe those big banks think we're very close to the peak of interest rates in Australia, because otherwise they might be wanting to assess their customers at the higher rates. But if they're saying, well, OK, if you've got enough of an equity in your home, 1% will be enough if we want to refinance, that kind of says to me that the banks themselves are really thinking that we're close to the peak of these rates.
Yeah, definitely. I agree with that. But like I said earlier, they, like many of us, did not predict the rate cycle and the stickiness of inflation. So, I mean, let's hope they're right. But yeah, I mean, we'll have to wait and see.
But the other point also, just very quickly, is it aids the competitiveness within that banking sector, so the customers do have some choice.
Yeah, definitely. But like I said earlier, I think we've already been seeing, banks know that, especially with the fixed rate customers, they're going to roll off. They know that customers are looking for a sharp price at the moment, and just picking up your phone and calling your bank has resulted in the bank dropping your rate materially. So I don't know how much more, or how material this will be. It's those people that perhaps couldn't move before. You add them into the potential movers, and then what percentage of those don't, just stay with their existing bank as well.
Now, it's going to be interesting to watch it. Nathan, Zaia from Morningstar, always good to chat to you. Many thanks for your time today.
Thanks, Ross.